Hello, my friends. My name is Cheryl Spengler, and this podcast explores the question, what does Northern Virginia have to offer me? Today, we are going to talk about tax lien certificates, tax lien auctions, and how you can get a home valued, anywhere from $100,000, $200,000, $300,000, $400,000, $500,000 for even like a $5,000. Where you can get a home, $150,000 to, any amount for as little as even $5,000. And how that all works. In layman's terms, I'm going to try to go through step by step so it doesn't sound confusing. So the whole point today is actually to help anyone looking to buy tax lien property in the state of Virginia. But in order to understand why Virginia does it the way they do, I need to talk about what tax lien certificates are and how they work outside of Virginia, and then what Virginia does. So a tax lien certificate is basically an amount of money identified by the local government that a homeowner is behind on their real estate taxes, and they bundle it into whatever the total amount owed in real estate taxes is put into what they call a tax lien certificate that they then sell to an investor, like anyone that exists. You don't have to be a special investor. Anyone who has money where the homeowner doesn't to pay their taxes, you do have money and you want to buy that tax lien certificate. Let's just say they're behind $5,500 and they have not paid their real estate taxes. That becomes a tax lien certificate and they sell it to an investor at an interest rate that is bid down. So let me just back up 1 second. Why would you be late on your real estate taxes? First, I want to say that real estate taxes are collected typically by the mortgage lender when you buy a home. They collect 1 year ahead and they pay real estate taxes as part of your mortgage payment. Now, there are 3 reasons why someone would not pay their real estate taxes. 1, or I should say 3 reasons why you could get in this situation. 1 is if you buy a home in cash. If you buy a home in cash, you have to pay your own real estate taxes twice a year, just like when you get a personal property tax bill for your car, for the local county or city you live in, you pay that twice a year. This is not to be confused with income tax. This is why people say you're taxed to death. Income tax on the money you earn is paid to the federal government and IRS. There's personal property tax, which is your car, and then there is real estate tax for the home that you own. Now, if you rent, you don't pay this. And when you buy a home, if you don't use a lender and you buy it in cash, then you're responsible for paying your own real estate taxes twice a year. If you do buy a home with a mortgage loan, and a lender helps you finance the purchase of that home, they normally collect 1 year up front and they pay your taxes for you. Well, some people, they get a loan with a mortgage company and they're like, you know what? Don't collect ahead for 1 year. I'll pay my own real estate taxes. Instead of the mortgage company holding all my money and possibly more than what's needed to pay my taxes, I'll hold whatever money I earn and I'll pay my taxes when it's due and I'll pay exactly what I'm told to pay so you don't sit with my extra money in your account. So sometimes that's the reason, and then for whatever reason, it's not paid on time. And the other way that you could not pay your real estate taxes is if you simply lose your job, something happens in your life where you can't pay your mortgage. And so since the taxes sometimes are paid through the mortgage company on behalf of you, if you don't pay your mortgage, then your taxes don't get paid. So there are like 4 ways that you could potentially get behind in your real estate taxes. Either you pay cash, pay it on your own, don't pay. Get a mortgage, don't tell the mortgage company to pay your taxes and you don't pay. Or you get behind and can't pay your mortgage and you don't pay. And so now that we've talked about like why this would even happen, there's a lot of reasons, a lot of ways that this could potentially happen. And so when it does, your real estate taxes basically for the local county or city you live in, they pay for the fire, the rescue, the police, the community, the fixing up. These real estate taxes basically pay for all the things that the local government does in the area you live. You know, the improvements, the roads, mainly the emergency services and stuff like that. And so they want their money. And when you don't pay, they will file a lawsuit in the circuit court to foreclose, to basically, yes, foreclose on the home. And it's a tax lien auction. In the state of Virginia, they do auctions. Outside of the state of Virginia, like let's say in Florida, I'll use this as an example because this I know. If they're delinquent on paying their property, their real estate taxes, then the government basically says, okay, well, this person's behind $5,000. Let's sell that to an investor who's willing to buy this bad debt. So we get our money and we can continue building and creating and serving the other local community members. And in the meantime, whoever buys the bad debt, that homeowner then owes them the money for the tax money, the bad back tax money, plus interest. So as an investor buying tax lien certificates, you win either way. You win if you buy the bad real estate tax debt because you get to charge an interest rate of 9, 12, 16, 20, whatever you are allowed or can do. And I say allowed because if you are in a state outside of Virginia and they have tax lien certificates of homeowners who are back due on their real estate taxes. As an investor, and let's say there's 3 of you trying to buy this certificate, the person who's going to win the bad debt is the person who gives the bad debt the lowest interest rate. Because in the end, you're buying the bad debt from the government who's owed the money, and you're then the person who the homeowner has to pay the tax debt to plus interest. And so if there's 3 of you investors, which is just considered any human being with more money than the homeowner, and you go to buy this tax certificate and you say, well, I'll buy the bad tax debt for 9% interest. And the other guy says, I'll do it for 12. And the other guy says, I'll do it for 18. Of course, the person who buys it for 9% is going to be the person chosen because it's the least interest charged. It just so happens that if you are an investor buying a tax lien certificate and there happens to be no competition, you can charge whatever you want and the homeowner's got to suck it up and take it because then they now owe you the tax debt plus interest. And so hopefully that's not confusing, but essentially homeowner gets behind on taxes, local government turns it into a certificate for someone else to buy, an investor. The investor buys it and gets interest. So within 3 to 4 months, they either have to pay you plus interest, or at that point, the local government will then put a lawsuit to sell the property. And okay, clarify. Outside of Virginia, there's tax lien certificates sold to investors. There is a time frame that homeowner has to pay that debt, even though the government is not responsible for it anymore, because of course you bought that debt for them. The homeowner has to pay you plus interest, or at the time period specified, you take ownership of their home. In the case of a tax lien certificate where the homeowner then owes you plus interest, owes you that tax debt plus interest, and they don't pay you, you take ownership of their home. You become the new title owner. However, in that scenario, you have to evict that homeowner. So by selling the tax lien certificates, the local government and treasurer's office, they get their money, but they also eliminate and alleviate themselves from having to go through that arduous process, and the money to evict, clean out the home, and it's a process through the courts. I mean, I can tell you that it's not that big a deal to evict people. You just got to know what the process is and follow it to a T, and send the right notices, and then 30 days later send a notice again, and then the sheriff basically kicks them out. But see, if you don't have it in you to evict people, sometimes I would say don't buy these certificates, because when you do, if they don't pay them plus interest back to you, you become owner of this property. For, let's say this is a $299,000 property that has a $5,500 bad tax debt you buy, you will become new title owner of this home. And if they're still living there, you'll have to evict them. And so that's outside of Virginia. If you're listening to this podcast and you're like, what do I do to get a free or cheap home in Virginia through tax liens? The way that Virginia does it is that the code in Virginia does not authorize the sale of tax lien certificates, but instead what they do is they do sales at public auction where the sale conveys the title to the property. And so the process is kind of the same throughout each county, but I will say every county is different. I am going to provide in this podcast a link to every Northern Virginia county's tax lien where you can sign up and get notices yourself, or a landing page link where you can just go onto my landing page and I will, for free, send you whatever county's tax lien auction list you want when it comes around. And so here's why I say when it comes around, because it's basically a 4-step process in Virginia. So we're 10 minutes into this podcast, and we're now just talking about the Virginia, but they basically break down into 4 steps. First thing is the treasurer's office of the county or city you live in sends a notice to a taxpayer, which is the homeowner, a 30-day notice to either pay the back real estate taxes or they're going to file a lawsuit in the circuit court. The second step is on the 31st day following the notice being sent, you either have to pay your back real estate taxes or set up an arrangement to pay those taxes, or the circuit court automatically files a lawsuit. The circuit court automatically has a lawsuit filed. It's like the lawsuit is filed, right? But it kicks in on the 31st day, and you have 30 days to basically either pay or arrangement to pay. So you don't have to go try to figure out how to get whatever $10,000 worth of tax debt. You can arrangement. You can have a payment arrangement. So as long as you don't ignore and run, you can always save your home. And then number 3, the court then determines the fair market value of the house that you live in and informs all the lien creditors, like the mortgage holders, anyone who's filed a lien against your property. Could, I guess, potentially be like a mechanic's lien. It could be that you hired contractors to put an addition on your home and you never paid them. Like whoever has a lien on your property, again, gets notified. This is if you had a 30-day notice, you never paid it or came up with an arrangement. The 31st day, automatic lawsuit will kick in, and then the court would begin the process of determining the fair market value of the property. They would inform the lien holders, creditors, which is your mortgage lender, lien holder, and everything. And they appoint a commissioner of sale. And this commissioner of sale is responsible for selling your home. This is the same commissioner of sale person who would show up at the local circuit court and auction off the house. It's at this moment, after all this is done. Now, just know that to get to this point where a special commissioner is assigned to sell your property because of back taxes in Virginia, it could take 2 months to 2 years. So when you're like, how do I buy a property? This is literally going on every minute. And so somewhere between 2 months and 2 years, this process is going on at all times with people. It's always happening. There's always tax lien sales. And at this moment, after step 3, is when I get emailed a tax auction notice. And the tax auction notice is simply coming from the special commissioner who's been assigned. And they send an email to anyone who subscribes that this property, this tax ID, this parcel, this home is going to be sold at the county circuit court steps on this day at this time. And if you want to be an investor who buys it for a fraction of the cost of the home, regardless of the fair market value, it's going to be sold for a small amount of money. I'm going to give you an example here in a minute. Then show up, right? So the email that comes out to me or to you if you subscribe to any of these counties is only after that step 3. And so once the email goes out to potential people, then used to be they'd put it in the newspaper, but right now I believe it's only online and an email list. The last step is that an auction is held on the front steps of the circuit court, And as an investor, if you show up just for fun, because you want to see, how this whole process goes, I believe you go on my Facebook business page, you can see that I went to an auction and videotaped it. It's way down. And how that whole process goes, it literally happens in like 10 minutes, 15 minutes. Someone comes out, they have a list of properties that are being sold on auction. They stand there with a clipboard, and when they're ready, they just start talking about the property, and they want to know who's bidding on the property. Now, in order to win a bid, the most important thing is you just got to show up. A lot of people just don't show up, right? 10 o'clock, Circuit Court, Fairfax County. 9 o'clock, Circuit Court, Fauquier County. Like, you got to drive to that Circuit Court on that day, on that time. You can't be late. You can't claim traffic. You have to show up. Just like most things in life, you win when you show up. You win when you answer your phone. Most things will happen to you in a positive way by just showing up and trying. So first thing you got to do is just show up. And if you do show up, the second thing you have to do is you have to listen and have with you a $10,000, $15,000, or $25,000 cashier's check. So you will need probably anywhere from $15,000 to $25,000 cash to buy a home that is being auctioned off based on tax lien in Virginia. And the reason is because, so the myth is that you have to go to an auction and buy the whole thing in cash. So if you don't have $250,000 in cash, you can't buy it. That's a myth. The reality is, if you show up at the Circuit Court and there's 5 homes being auctioned off, they're only going to require from you, and they list this actually, each county, that's why I say it's different, around anywhere from 10 to 25,000. Sometimes they'll even take 10, even though they say 25. Let's just say 25. Bring a cashier's check, not written out to anyone yet, for $25,000 with you on your person, and have it with you. And so if you see a property and you know a property that you want, and you've previously already identified that address and you went to go drive by it, you know what you're buying, okay? Don't just be like, well, I wonder what this is. Like, you get the notice in email, and 30 days later it's auctioned. All right, so from the time you get the email telling you there's an auction, it's 30 days later that it's auctioned on the front steps. You have 30 days to go drive by that property, possibly, if available, walk around it. You cannot go in it because in a lot of cases there's people living there. You can look it up on Google Earth. You can scope out the neighborhood. You can look at crime rates. You can look at everything you need to look at. You can look at the past sale. You can have a real estate agent look up all the pictures that showed up in the property on the last time it sold in the MLS. You can look at Zillow. You can look at the Zestimate. You can look at what the rent Zestimate is. I mean, you can do all kinds of research. You do not need to get in the property. And looking online and a quick drive-by, you should know whether it's something you want to put $25,000 cash down on, which is what they collect from you if you win the bid. And they literally bid it like an auction. But if there's no one there and they don't show up, you could get a home that's $350,000 for $60,000. And so what you do is, if you win and there's no one there, or you're the one that gets it, you give them your $25,000 cashier's check. Sorry. You give them your $25,000 cashier's check, and they basically present that offer to the Circuit Court, and they approve it. But the thing is, you have 30 days to get financing. You have 30 to 45 days to then go get a lender to help you finance that purchase. So if you go to the county courts, you've already done the drive-by and looked it up, you're like, wow, I'd love to get this property for a fraction. You have a $25,000 or less cashier's check in your hand, and you happen to show up and bid and win, then you basically could get that home for $60,000 or $80,000. And then you're going to a lender and you're only having to finance $60,000 or $80,000. And you have 30 to 45 days to get that financing straight. And the county gets their $25,000 deposit. And then in 30 days, the sale goes through just like a normal purchase with a lender. The value has already been identified. The appraisal is done by your lender. You're financing it like you would go buy any home. And in the end, the Circuit Court and the Treasurer's Office gets their back tax money, and any creditors who have been identified will get paid off, and then you get the title to the home in Virginia. When you get title to the home, there may still be people living in the home. You will then have to evict them. In both cases, outside of Virginia and inside Virginia, you will, by owning the tax debt, or in Virginia, by buying it at auction, you still have to evict if someone's in there. And that is a simple 90-day process. You just have to have the heart to do it, and you can't be squeamish and get out of that, because technically, you're either going to work with the people and let them rent from you, and I've had clients do that, or you evict them and fix up the home and sell it and just make $150,000 to $200,000 because you happen to buy it at like $60,000 and it's actually worth $300,000. You can do whatever you want, but the point is, at auction, if you win and 30 days later when you buy, it is yours. It is yours to evict. It is yours to allow them to rent from you. It is yours to fix up and sell. And if you do it outside Virginia, you're buying a tax lien certificate, bad debt plus interest. And if that's not paid back to you, you then get the title. So I'd say outside Virginia, you have the opportunity to actually get cheaper because you're only buying the tax debt. You're not actually bidding for the home at auction. And outside of Virginia, if the tax debt is not paid to you, plus interest by the homeowner, you then get title ownership of the home. Inside Virginia, you buy at the county courthouse, you get title ownership of the home. So if you want the opportunity to even know what is available, I put together a list of all the links and went through the process of digging all the county and called the commissioners, called the treasurer's office, and did the research for you. They're going to be listed in this podcast, or you can go to the landing page link that I put in this podcast and just choose the county that you want the list sent. And whenever this 2 month to 2 year process is done, and the point where the email goes out and comes to me, it'll automatically go to you. Hopefully this helped you understand a little bit about all the ways that you could go delinquent and how fast you could lose your home to not paying your real estate taxes, and how someone else could buy your bad debt and then you would owe this person, not the county. And if if that irritates you and you don't pay them, then they get your home. So this is an amazing, amazing opportunity for investors to grab a home at any age. You could be 21, you could be 18. And you know that you can buy a home at age 18. All you got to do is be 18, you can buy a home. So at 18, 19, and 20, you could be buying other people's tax debt and gaining somewhere between 12 and 16% interest when they pay it back to you. And you could end up with a list of like 50 different properties that you have other people's bad tax debt, earning interest, massive amounts of interest. Or in the state of Virginia, go buy for a fraction at auction. Anyway, I hope you guys enjoyed this, and I will try to have some auctioneer on this podcast to go through the process. But if you want to check out my Facebook page, I did video record an auction at the Fairfax County Circuit Court. It's been a long time, but maybe I'll repost about that. And I will talk to you guys in the next podcast.